Hey guys, what's up? Alec back with the daily stock market, and look at that, Lucid down 4.7%. What we're going to talk about in today's video are 5 different high-risk stocks, Lucid being the first one, and we're going to talk about AMC and other high-risk stocks. So if you're more of a risky investor, this is going to be a good update on some of the top risky stocks that people love to trade. If you're a long-term investor, this may not be the video for you. So before we jump in, just smash a like on this video and make sure you subscribe with post notifications on YouTube. That's the only place where you can find all the full-length videos. So the first stock, Lucid, down 9.9% in the last month, down 48% in the last 3 months, and from its all-time high, down 61% still. If you look at the support and resistance and some trend lines going on, it looks like that it's pretty much at that support right now. Okay, so that's why we're talking about in this video. It could be possibly a good time. Here you can see sometimes it hit that bottom support in the past, and sometimes it hits that top resistance as well. So under $20 per share, as close to $20 per share, could be a good time to buy. Remember, this is a high risk stock, so there's always a good chance that it could go back down to the IPO price, closer to that $10 per share or even lower. That's why I'm personally not loading up on Lucid. As you can see, I only have $74 in Lucid just to track kind of my shares. You can see I'm down 15%. It's only $13, so it's not a big deal. I could add some more shares now. And, I might think about buying a couple more shares, maybe like 10 more shares under $20 per share. But diving a little bit deeper, we can see there's no PE ratio. They're not a profitable company. They have a $34 billion market cap. They have a 52-week high of $57, and the volume is 18 million on average, which is a very highly traded stock. And here you can see the EPS is getting more and more unprofitable as the quarters go on. The next expected earnings is May 12th. So that'll be interesting to see if they can show improvements by then. Additionally, we have analysts with a 92% upside on average at $40 per share. Some analysts have them as high as $60 per share in the next 12 months. Some analysts have them as low as $12 per share in the next 12 months. So needless to say, there is a lot of risk involved. I think there's a big possibility we can see them around $30 per share, at least closer to $40 per share in the next 6 to 12 months. But I also think there's just as good of a chance that we can see them at $12 per share in the next 6 to 12 months. So typically what I like to do with risky stocks like this that I'm not too sure of the future, that have a high risk potential, is I don't use a large potential of my earnings. Okay, so for example, I'll only use like 1% of my portfolio diversity, and sometimes I'll even use closer to 0.5% of my portfolio diversity on a stock like this. A couple $100. So that way you're not breaking the bank. Okay, the next stock that we have up is everyone's favorite meme stock, AMC, at $17 per share. And in the past month, it's up 20%. And it was even up 97% just recently, like 2 weeks ago. Okay, so from lows of $13 per share, I've talked about this before, we saw this support right at $13, $14 per share. So I think if we can see it closer to that $14 per share once again, or even $15 per share, that could be a good place to load up for short-term swing trade potential. And I would be looking for around $30 per share, even $25 per share. If you can get in at $15 per share and sell at $25 per share, for example, I think that could be some good momentum in AMC stock. There's no telling what's going to happen with AMC stock. Again, that's why it's on this list. It's very high risk, very high reward. There's also short-term potential with AMC as well. If we hop over what analysts have to say, even though the fundamentals aren't a huge thing when it comes to AMC, it's more of like a meme hype stock. Okay, so you have to take the analysts with what they're saying with a grain of salt, but they have this as a very high risk stock. On average, down 45% in the next 12 months, closer to $9 per share. The highest analyst has them at 16. The lowest has them at 6. And you can see a lot of these are 1-star, 2-star analysts anyway. Okay, and they reiterated this over 2 months ago. So again, you have to take this with a grain of salt. And we have one analyst with a $1 price target. Actually, we have two analysts with a $1 price target on AMC. So needless to say, it's extremely risky. There is some short-term potential with AMC, but I'm not loading my bags or anything like that, YOLOing into AMC. This is an older stock that already lost a lot of its traction. And typically, when you're doing $1,000 bet, you want to be ahead of the curve on the next new big thing instead of being behind the curve on something like AMC or GameStop, even though they have some potential of bouncing back and doing 100%, 200% gain. That's why they made the list. Now, the next one up is the cheapest one on the list by far, Context Logic or Wish. $2 per share. Okay, we see them up 6% in the past month, but down 17% in the past 3 months. However, if we zoom out to the last year, you can see a disaster has happened with Wish down 83%. Okay, this is kind of like a crypto movements that we see, or like an NFT. You know, stocks usually don't lose 85% of their value in the span of less than a year. So it's extremely risky with the stocks that we're talking about on this list. Needless to say, if we look, obviously a lot of people know Wish. They're kind of like an Alibaba Express. They have that app that sells like the very cheap stuff, kind of like a very cheap Amazon. Okay, the market cap right now is 1.3 billion. So I wouldn't be surprised if we saw someone like Shopify or Amazon come in and swoop up Wish at a very low valuation. Okay, so that's what Wish holders are currently waiting for, is a huge turnaround in the business. We see them coming more profitable and profitable in the last 12 months. However, the share price does not reflect their EPS growth. Okay, so we see the chart going straight down, yet we see the EPS going up and almost becoming a profitable company. And the last 2 quarters, they beat analyst expectations every time. Now, if we look at what analysts have to say, we see a 92% upside on average, okay, at $3.80 per share. If we see $3.80, there's a possibility that we could see 92% gains. Okay, so that's the good thing about Wish. It doesn't have to pop back up to $10 or $9. Even if you buy at $2 and you sell at $4, $5 per share, even $3.50, you're in the green by a lot. Okay, some of these analysts haven't made any of reiterations in the last month though. So these are kind of old analyst estimates. With the EPS growth, and if Wish becomes more and more profitable and into profitability and actually has an EPS and has a low EPS, there could be a good chance that Wish could make you 50% to 100% gains. Now, obviously, this is not financial advice, and this is the riskiest. These are the riskiest stocks of the whole stock market. Also, keep in mind, so there's no guaranteed with any of these stocks. Next one up, we have Affirm, ticker symbol AFRM, down 8% on one day, which was Friday, or actually Thursday, because Friday the stock markets were closed for Good Friday. The last month, we see them up 7.8%. But however, in the last 3 months, we see them down 47%. So there has been a huge fall from all-time highs. We have Affirm down 78% still to this day. We had them as high as $161 per share. So we have Affirm falling in that high risk category, okay? Anything can happen with Affirm. We can see them go to new all-time lows, $12 per share, $15 per share, but there's also an equal possibility that we can see 100 to 200% gains on something like Affirm, especially if that buy now, pay later mentality keeps getting adapted in the US and other countries as well. Obviously, that's what consumers like right now. They only have a $10 billion market cap. So if something like Visa with a $400 billion market cap wants to step in and put 5% of their market cap and scoop up something like Affirm, that could be a good play for something like Visa, MasterCard, Amex, or even something like PayPal or Square, or even something like Amazon could make it exclusive to their Amazon platform only. So there is definitely some potential with Affirm. There's obviously the risks, like we've already talked about and said many times throughout this video. We have analysts saying $69 per share in the next 12 months is reasonable for Affirm. Okay, we see some of them saying as low as $45 per share is the risks that Affirm has. These were all reiterated in the last month. We have some 5-star analysts saying $58 per share is a strong possibility for Affirm in the next 12 months. So that is refreshing to hear that we only have a small downside on a firm according to the analysts, and we have a large upside according to the analysts. Personally, under $35 per share and even closer to 30 or under $30 per share, I think is the best place to load up on a firm. And if you can sell above $50 per share, I think that's a good return on investment or quick swing trade for short-term investors as well, with some high risk sprinkled in the mix. Virgin Galactic Holdings, the last stock that we're going to be talking about, and they're down 12%, or they're up, 12% in the past month, and they're down 61% in the past year. It looks like they basically just had a sell-off in this whole past year. If we zoom out, however, to the 5-year chart, what is the pattern that we see with SPCE, Virgin Galactic Holdings? And this is why they're on the list, is because every now and then we just see a huge spike. Okay, up to $54 per share, and then immediately in the span of like 4 months sells off 70% and then bounces back up, all right, 100 and something percent, and then sells off again. So with that being said, under $10 per share could be a buying opportunity. And there is a strong possibility that we can see SPCE randomly pop back up to around $15 to $20 per share is where I would be offloading. Obviously has extremely high risk, and there's no guarantee that it will pop back up like it did in the past. So there is always a possibility, especially with space exploration. That's just a high, it doesn't matter what stock you're talking about in that sector. It's just a high risk, high reward, sector in general. Think about it, it's a rocket ship. They're millions and billions of dollars. It's hard to be profitable, as you can see from the EPS in that sector. And even if a rocket blows up or something doesn't go as planned, or it explodes and kills some astronauts, those are huge things that could affect the share price and the reputation of a company too. So there is some high risk stuff going on, but there's also high rewards. If Virgin Galactic is the first galactic holding, space holding that puts people in space, residential people, for vacations and stuff, and they become very successful at that. That's what SPCE is trying to do. However, the risks involved are extremely high, like we talked about. The market cap is also 2.3 billion. So somebody could come on, a billionaire could easily come in and swoop this up. However, Richard Branson probably would not be selling it for anything close to the 2.3 billion. And just jumping in real quick to see what the analysts have to say about this stock, 41% upside in the next 12 months with a $12.68 price target. Some of the analysts have them as high as $24 per share in the next 12 months. I think that is very possible. However, there is some risks that we already talked about in this one. So without any further ado, thank you guys for enjoying the videos, leaving the thumbs up, liking the videos, sharing with the friends. Make sure if you want to get on my close friends list, you go ahead and read success number 5 on my highlight section. Success number 4, we have hundreds of positive testimonials from student success. Also, the stock market is going to be bouncing back in the summertime here too. So a lot of money to be made between now and summertime to get on the close friends list, where I post all my alerts, be in the loop every time I buy, sell, and everything in between. So reach out to me here on Instagram. I'll shoot you over my website so you can look through it, see what's going on, and if it makes sense to you and it's inside your budget, then I'd love to help you get started today. Also going to be doing a $200 to $300 giveaway this week on the daily cryptocurrency, so make sure to follow it there. Also, the first 5 people to comment below, $5 for free in Venmo or Cash App. Just screenshot your comment and send it to me on Instagram, and I'll send you $5. Congratulations for making it this far in the video. All right, I'll see you guys in the next one. Remember, don't time the market, buy the market. Peace.